Hello, everyone. Hope you're extremely well. Today, we are here again with the legend Simon Brown. We'll be looking at some of the companies that he is following closely at the moment, and we'll get some opinions on whether he's buying, holding, or selling them. And there's some few interesting companies in that. We'll also touch on a topic that's been really trending on Twitter and everywhere, and that is Aveng, which is a 5-cent stock. So stay tuned till the end to not miss any cool information and important information. We all know Simon Brown is quite good at what he is doing with investing. So I'd urge you to also have a listen to what he's saying. So Simon, it's great to have you back. And last time we spoke about your 5 top picks. So that is a video that you can go watch. Today we'll be touching on a few other companies, and like I said, Aveng as well. But let's first talk about the 3 companies that you told me that you like at the moment. The first one is Murray and Roberts. So please give us some more explanation on that.
Yeah, Higa, how's it? So, I mean, Murray and Roberts is, they keep on announcing they've got some new big contracts. It's about 6 odd billion in contracts that they've signed, and these are 3 big ones over the last couple of months. That only adds about 10% to their order book. But if we look at their last set of results, which was what, 6 months to end December, they actually it was a tough period for them. And I think the first 6 months of this year's probably going to have been a relatively hard. Better. They should start moving and getting some profit going and the like. But Murray and Roberts is no longer the old classic construction/civils business. They're operating in the mining space. They operate in oil and gas. Both of those have been doing fairly well, obviously. Oil with the price back above $70, we should see activity there. And we know what's happening in mining. So Murray and Roberts, certainly those are 2 good spaces that they operate in. They've got Australian operations as well. And it hasn't been the most plain sailing of 6 months. There's still been varying degrees of lockdowns coming and going, which will impact them. I'm not sure how much supply logistic bottlenecks are impacting them. Probably not very much, although maybe a bit on the equipment side. And then they've also got an infrastructure division based in South Africa, which hasn't made money for them in years. But I can't help thinking that this could start sort of kicking in. Every time I speak to Henry Loss from Murray and Roberts, I ask him about the infrastructure. And he says, you know what, we're keeping the capacity and the skills, and it's not costing a lot for when sort of that spend starts to return. And certainly we're seeing some evidence that it is coming back. And of course, the announcement by the president now almost 2 months ago that users can generate up to 100 megawatts without requiring licensing and the like. And that's going to be huge. I mean, that is potentially on its own 150, 200 billion rand of spend over a couple of years, generating 3,500, 4,000 megawatts into the grid. And I think they're just really well positioned for the economics around them. They've transitioned the company incredibly well from being a sort of classic construction/civils operation. And the share price has just been stuck. There's a seller at 10 Rand a share. And the share price has just sort of gone nowhere. I haven't yet bought it. I've written about it for FinWeek, and because of deadlines and from when I write until when it actually hits the streets, I sort of block myself. I don't want to front run my own columns, etc. But as soon as that's up, I mean, certainly, I think it's got a great potential. There's others in the space. We can touch on Aveng in a bit. There's Wilson Bailey. There's Steph Stocks, which is borderline bankrupt. I think Murray and Roberts, for me, I like the spaces that they're operating in very much. So
to conclude, you like Murray and Roberts at this levels?
Yeah. So I mean, as we're recording, which is Thursday afternoon, it's 10 Rand at the moment. There is a seller who keeps on every time it sort of goes through, comes back and keeps it at $10. There's a lot of value on the JSE at this point, and I think Murray and Roberts is almost certainly one of them.
Yeah, and I think there's also a lot of opportunity in construction as the government wants to ramp up the economy again and just start implementing some economic movement. And a great way to do that is through construction. And I think maybe even through what happened in KZN and Gauteng with the looting, maybe that might even benefit the construction even more as more companies will have supply now for that. So then you touched on Aveng. Let's quickly jump on that. I know there's a lot of people waiting to your opinion on that. So it's trading at what, 4 or 5 cents a share. There's been a lot of buzz around it. If I'm not mistaken, JP Morgan or some big bank invested in it. So yeah, let us know what are your thoughts on Aveng?
Certainly, there has been a fair bit of interest here. There have been some peeps building a fairly chunky positions here, and of course, it was a 1-2 cent, and then it went 2, 3, 3, 4, and now it's a 4-5 cent share. So there's a lot there. You're gonna have to pay 5 cents if you go onto the bid at 4 cents. You're going to wait forever and a day to get traded, and every time it crosses that spread, it goes into a volatility auction just because of the width of the spread. Avengers more your classic construction in a sense. I mean, you mentioned some of the uptick from the violence of July, particularly in KZN, to a lesser degree in Gauteng. Aveng will pick up some of that, the shopping centers and the like. That's sort of beyond, no longer really what Marion Roberts operates into. Aveng was frankly borderline bankrupt. In fact, we could probably say they were bankrupt. They've done a couple of rights issues, which has got them into a significantly better position. For me, penny stocks, I stay away from them. I've never dug deep enough into it. What my sense with Aveng is what they're going to do is a share consolidation. Now, what that is let's say you've got 100 Aveng shares and they're 5 cents each. So you've got 5 rand of Aveng shares. They consolidate 100 into 1. So your 100 shares becomes 1 share. And instead of 100 shares at 5 cents each, you get 1 share at 5 rand. What typically happens when you see a consolidation like that, although Aveng might be different because there is certainly the penny stock punter interest in it, is that usually a consolidation sees the share price actually fall a bit. So it should be 5 rand, maybe it drops to 4 rand 50 or something, because it can find that midpoint between 4 and 5 cents when it's actually 4 rand and 5 rand. So I will, when that happens, it hasn't been announced, but they've got literally billions and billions of shares. It's almost certain that they will do a consolidation. When that happens, then I'm going to have a long, harder look at it. Certainly, folks have done well in it. There's a couple of asset managers who've taken some speculative positions in it. At this point, I'm not chasing. It's great for the guys who are doing well with it. To me, I like my companies a little more robust and a little less close to the edge.
Cool. Yeah. So to conclude, Simon Brown is staying on the sidelines for now. There you have it. On Aveng, you might be interested if there's a share consolidation. So stay tuned. Maybe that happens. Maybe not. Let's have a look. I know it's definitely a punt. Just always be, do your own due diligence when you make these punts. Just know it's risky. Just before we go on, I just want to say that, remember, this is not financial advice, purely our opinions. So back to your stock picks, Simon, on your personal stocks to buy list. You've got a bank ETF. Why?
Yeah, so I've taken I suppose the lazy approach and picked the ETF rather than the bank. I picked up a position in it a couple of months ago because it's an ETF. I stick it in my tax-free account, so there's no tax implications. I'll tell you why. The banks were not as hard hit by the pandemic in 2020 as everyone expected, including the banks. And what they did is they put aside massive provisions for bad debts. And their bad debts certainly spiked to levels, in some cases, even more than we saw back in 2008. So certainly a lot of pressure on the banks. The Banking Prudential Authority requested that they don't pay dividends last year, which they didn't. But now those dividends are starting to flow and come back. And that money that they set aside for bad debts, not needed, so it now comes back into the bank. It went out through the income statement, comes back in via their income statement, but they now, surprisingly, a year and change into a pandemic, somewhat awash with cash. Nedbank and ABSA both didn't pay a dividend at their year-end results, which were published in March, but they did say that, as capital returns and the like, they will return that money to shareholders, probably in the form of special dividends. And if we look at the banking space generally, those stocks are just cheap. I mean, Nedbank on Wednesday evening after the market put out a trading update. And it was a good trading update, although if you got to strip out those like for likes and everything else, but you do that, and the stock's up 10% on Thursday, 9.75%, trading back at early March levels from last year. So at that point, late February, stocks were starting to collapse. And I just look at the banking sector generally. We had that nice good run towards the end of last year. Then they started going nowhere. I think we're going to see some good numbers coming out. Results will start coming towards the end of August, early September. I think all of the big banks are going to be giving some good results for their half years. FNB, it'll be a full year. And then come December, when we get the next set into early next year, I think we're going to see good results considering a pandemic. I think we're going to see really good dividends coming through with that excess capital they've got. I hold Capitec, and I've held Capitec for 12, 13, 14 years. When I look across the rest of the banks, it's I always struggle to which is it? You can make an argument for certainly for ABSA on valuations, on Standard Bank and its exposure into the rest of the content. FNB always been a class act. So rather than picking, I then just go and buy the ETF. It's also a slightly weird ETF in that it's got some property in it. So Growth Point, and I think the other one might be Redefine, are the two property counters sitting in there as well. Of course, there's some insurance. The insurance is not going to be a particularly exciting space right now. We saw the Liberty numbers come through, increase in claims, long-term insurance claims for death and the like. Short-term insurers, obviously the violence of last month, they might have reinsurance, but to what degree? So my sense is that a bit of a mixed bag. But those that are under pressure, the insurance space, the property space, I don't see them falling particularly further. So to me, this is very much a case of those big banks, the Investex as well, the Capitex, they're going to start coming through. And I think we're going to start seeing some solid profits in banks that are really, really cheap. A last important point on the banks, these are never resource stocks, where, Implats can be 20 Rand 3 years ago and now makes 25 Rand profit in a single 6-month period. We're never going to see that sort of explosive moves from banks. So they're kind of at the lower end, and because of ETF, even more so. But I like some exposure to it there. And because it's an ETF, I said, I put it in my tax-free account, so that's nice and efficient as well.
Awesome. And just 2 questions. First, what is it called, the ETF? And second of all, does it pay dividends?
Yeah, so it's Satrix Fini. Code is STXFIN. It pays dividends, and I think it actually pays quarterly, although let me just double check that. Yeah, it pays quarterly dividends. You will find that your July dividend is typically a little bit more chunky, but it pays a dividend every quarter. There has just been one. Last day to trade was back sort of towards the end of July. Next dividend will be coming through in a couple of months.
Awesome. So there you have it. I mean, if you invest in this ETF, you get quarterly passive income. That's what dividends are. If you invest, you basically get a thank you note from the management. Thank you for being shareholders. Here's your share of the profit. So that's a nice passive income idea for you. Side note. And also there you have it. Simon Brown likes the financial sector, the banks. Then we get to your final stock pick before we touch on something else, and that is Sibanye. Please elaborate on that. Before you do, for all those watching, please consider liking and subscribing. It will help this video spread far and wide. And if you subscribe, Simon and ourselves will try to do this once a month to add more value to you. So Simon, your final stock pick, Sibanye, please tell us why.
Yeah, so I think we chatted about this last time we did a video. I've held it. In fact, I bought some pre-crisis. I bought some back April and May last year. In terms of like the profits, we've seen it from the Implats update. We've seen it from Kumba Iron Ore. We've seen it from Anglo Platinum, Anglo American. The commodity space is absolutely booming. They've got record profits. They've got very few, if any, new projects on the go. Debt levels have long since been paid down. So generally, the mining sector is incredibly healthy, probably healthier perhaps than it's ever been in the history of mining in this country, just because of those low levels of debt and very few new projects. So that's not putting much demand on their capital. In the mining space, my preference is PGMs. I don't believe that the PGM prices are going to start falling anytime soon. Rhodium, in fact, I think is probably likely to move back to the high $20,000-$30,000 an ounce. And of course, there's an ETF on that. ETF RHO is the code. So you can pick almost any of them. I like the PGM space. And in that PGM space, my preferred is going to be Sibanye. And you can make a great case for Implats. You can make a great case for Anglo Platinum, even Northam, who are putting out a lot of production and increasing their capacity, which is a great thing to be doing at this point in the price cycle. I like Sibanye because they've also got the palladium assets in North America via the Stillwater, which they bought. They've got the platinum assets in South Africa, in Rustenburg, and of course they picked up the Lonmin operations, and they've got a bit of gold. Gold was about a quarter of the business in December period end. I think by now it's probably even less than a quarter of a business, a quarter of the operations. But it's, as I said, if PGM prices are going to kind of remain where they are for the next year or two, heaven, maybe even 3 years, then we're going to see super profits coming out of these PGM miners. Sibanye has done a few little acquisitions, particularly in the battery space and clean, the sort of clean metals and the like. Neil Froneman will also probably, instead of giving all dividend, he will announce some share buyback. Instead, we saw Anglo Platinum and Kumba pay 100% dividend, and that's because it flows to parent company Anglo American. There's no real benefit to a share buyback when the parent owns around 80%. Any one of the platinum miners is going to do you great at this point. They're in that sweet spot. And as I said, there's the demand remains there. The demand-supply imbalance is not going away. We are seeing some pickup in production. Implats has announced they're going to increase production, expand production by about 5%. We're seeing some efficiencies come through, which is getting more out of the ground, but none of that is going to offset the current supply-demand imbalance, which means prices probably where they are, which is what, platinum 1,000, 1,100, palladium at about 2,600. I think it's a little high, could come down to maybe the low $2,000, and then rhodium, which, as I said, has quite stumbled. It hit almost 30,000, came back to the low 20,000s, but likely, I think, to go back. There's just huge demand for it. And if you are using them in catalytic converters, the idea of stopping production and switching to a different white metal is just not financially viable. You've got to shut down the plant. The cost of the PGM in the motor car is $50, $100 in a car that's retailing for $30, $40, $50,000. So it's not material, and the loss of income and downtime by switching is just not viable. New factories come online, and what they do is they've been tooled to be able to work with either of the PGMs. So they can switch and change in between. But the existing factories are doing where they are. That's where they're going to stay in terms of the PGM space.
Yeah, so like we said earlier, that there's a lot of opportunity in construction. As you know, global economies will look to add better infrastructure and improve the infrastructure. It's a great way to give the economy a boost. And for construction, you need resources, and that's probably why you like the resources space now. And as you said, your pick is Sibanye. So there you have it. Those are the three topics. And then just the last note, we'll look at some of the retailers. I know many people are, interested in investing in retailers. So what are your opinion on the retailers at the moment?
I think mostly, so the clothing retailers, they're doing okay. They're going to have some challenges. The violence of last month didn't help, of course. The rioting would have trashed stores. Those are taking longer to reopen. In the clothing space, it's probably Pepkor. Mr. Price probably a close second, with the Foschini group thereafter. Others, such as non-traditionals, for example, Cashbuild. I quite like Cashbuild. In fact, I wrote about it for FinWeek in last week's issue, talking around Cashbuild as a not just a good valuation at this point in time, but one that will benefit from the grants coming through from government, the 350 Rand to unemployed people, which is approximately, it's going to be around about 3 billion a month between now and March. Some of that will go into cash build. And of course, again, just the rebuilding process after those riots in KZN will benefit them as well. In the food space, we saw today a really strong Woolies update that picked up a lot of the other food retailers at the same time. I hold Woolies, although I haven't added to that position recently. My preferred there is Shoprite, which has been doing, we chatted about it last time. It's been doing incredibly well. It's now at 168 Rand. And if I zoom that chart out, taking it back to prices it was last seen over 2 years ago, sort of early part of 2019. Shoprite's going to also particularly benefit from that those social grants, unemployment grants going out, that 3 billion. A lot of it will be spent at Shoprite. A poor unemployed person really has their main cost, spending cost is going to be food. Transport, yes, if there's, to get to health facilities, to get to potential employment opportunities as well. So definitely in the transport space, and then a bit of airtime and everything else. But for me, Shoprite certainly is one of the best retailers in the world. And if we look at the chart, technically that chart is looking really strong after hitting $100 a couple of times last year. And I was picking some up. I mean, I've held Shoprite, I think 2004 roundabout was the first time I bought it, probably about $8 a share. But it has remained a sort of a key part of my portfolio ever since. And I think the retailers are going to be seeing some pickup. The writing certainly hurt. They'll have insurance. They're going to lose some sales and the like because simply they closed. The pandemic doesn't help either when we have higher levels of lockdown. But at the end of the day, people need to eat. And consumers, shop with their wallets. They know where they get their deals, and it's the broader Shoprite stable.
Yeah, I'm also a big fan of Shoprite, not just for investing, but shopping there.
Yeah.
And that 66 app is really picking up nicely, and it's so luxurious. Yeah. And they're doing that and executing that really nicely. So it just shows you that they are also.
Yeah, that 60/60 app. I mean, Pick n Pay they bought Bottlers and have renamed it ASAP. Woolies has got Dash. I can't use it in my area; it's not available. But of the online shoppings, the 60/60 during hard lockdown, some of my deliveries were taking a couple of hours, and they would phone you and let you know. And that's fine. I don't want to go to the shop anyway because there's a pandemic out there. But now, I mean, I've had deliveries in 23 minutes. Someone on Twitter today, from when you pay on the app to when there's a knock at your door, literally 20 odd minutes. They are, in my sense, so far ahead of the game, particularly compared to the Pick n Pay and the Woolies offering. I chat with folks in the US. Obviously, there's Amazon Fresh. There's other operators doing it. And I got to say, from anecdotal, and I've never used the US ones, but from what friends in the US talk around those food delivery apps, the 60/60 is beating the US operations hands down.
Yeah, no, it's an amazing business, and the CEO is doing really well. And I also love Shoprite for the long term, and it's a company that will still be in 20 years' time. So, if there was one company in South Africa that I'd had to buy and hold for 30 years, it would probably be Shoprite, because, like you said, people need to eat. So to summarize everything, Simon Brown's top 3 stock picks to buy is Murray & Roberts, the bank ETF, and Sibanye. We touched on Aveng. He's staying on the sidelines and saying it's a bit of too much of a punt at the moment. And then finally, he likes Shoprite for the long term, and people need to eat. So if you have any questions, feel free to ask in the comments. If you want to add something, feel free to add in the comments. And whether you are investing in any of those, we'd love to hear. Please consider liking and subscribing. Like I said, we'll try to do this once every month to add value to your life. Simon, thank you so much for your knowledge. And everyone, thanks for watching. Hope you have a great day. Cheers.